on board then Rahul Shah and ask him about what he's making of the market setup right now. Rahul, hi, morning. Great to have you on the show. Rahul, first let's analyze whether post the banking numbers, can banks really take the Nifty closer to a fresh record?
Hi, good morning. I think way the markets have been and way the banking results, I think most of the large names have come on Saturday, and I think we have seen, and most of them you have discussed also. So what it looks like, I think the credit growth, which remains stronger for most of the banks, and it looks like, I think the miss was majorly in the terms of the names in most of the banks except ICICI. So I think that's one thing common for all the banks, what we have looked at it. So I think more or less in the large banks, maybe you might see some kind of a pinch today in a couple of banks. But I think the downsides remains very, protective in most of the large banks. I don't see, major correction happening in any of the banks. So I think HDFC overall the valuations is well in place, 1.8 times book what we are valuing at FY27 earnings, and plus the subsidiary, I think the reasonably priced. So you can see 25% upside from here. ICICI Bank, I think robust numbers. Axis a bit below estimate. So I think we might see, sell off in Axis, and Axis can remain, sideways for some time. Kotak again has strong numbers. So Kotak again can see a kind of a momentum. Surprisingly, also we saw a good numbers from PNB, which came up on Saturday, which is strong numbers in all fronts. And I think what we have seen is stock is underperformed for quite some time. So we might see again back into momentum. So I think overall, if I analyze most of the bank's numbers, so I think financials is one sector where the visibility of earnings is there in this kind of a volatile market. So I think limited downside, and I think if any corrections, we will be buyer in the large private sector banks.
Interesting. Okay. Rahul, before I quiz you on Reliance, give us a sense on how you're looking at sort of smaller names. Federal Bank came out with numbers on Friday. Stock was up 7%. You've got Yes, you've got RBL. Those were the other ones. I'm not sure if you've had a chance to look at the fine print, but if you have, give us your take.
So I think RBL, yes, there was a miss the way the stock has moved up. And I think as most of you discussed that the NIMs have fallen 28 bits. And I think overall, if you look at it, maybe any correction, RBL looks stronger. If you find at 5-7% below, then I think could be a good bet. I think overall commentary remains very strong. Wholesale remains strong. Retail remains strong. MFI, entire sector. So I think double-digit growth, what they have talked about it. So I think any correction, I think RBL could be a good bet amongst the other smaller banks. Federal, as you rightly said, the numbers were good, and I think stock has gone up on Friday. So I think Federal, another you can see any sell-off in case of the markets turns weak, then I think could be a good bet. So I think this to remain the preferred bet. Yes, I have not gone through too much, so I'm not able to comment on it.
Rahul, how do you look at the big boy Reliance? It came out with earnings on Friday evening.
I think the numbers were above estimates. If I look at the overall, the EBITDA was above estimates. And if I analyze all the segmental revenues, so I think I don't see any miss in any of the sectors. If I look at it, the digital, which remains stronger and which remains going to be a stronger in next couple of quarters as well. Geo's number in line with what we estimated. OTC numbers were also stronger. So if I have to look at overall, so I think Reliance numbers were quite decent. Going forward, I think valued at 20 times earnings. So I don't think so. And reasonably valued, and stock has underperformed for quite some time. So I feel that the downside is restricted. We could see around 15-18% for our investors in a year's time.
Okay, welcome back. We're still with Rahul Shah as well as Kunal Bothra. Rahul, I'll quickly come to you. Landmark Cars, there's been a block deal there. Helios picking up some stake. Quite a few stocks where stake has been picked up. Nilkamal was the other one. Landmark Cars was one. Okay, I believe there's an audio issue with Rahul. Let me go across to Kunal. Kunal, what's the view with regard to some of the buzzers on the back of blocks? Landmark was one of them. Nilkamal was the other one. I know you probably don't track these very closely, but just give us a perspective on charts. Should one go long at these levels?
Yeah, so there's a lot of restrictive moves which is happening for many of these names. Landmark Cars, for example, in 2024, The stock was almost at 850, 900, had fallen down more than 50%. The lows in 2025 second half and 2026, where the stock retested, was almost at 350, 360 for landmark cars. So these are very sharp corrective phases the stock had seen over the last 2.5 odd years. And now these stocks are trying to make a good comeback. So after this 15-20% recovery, we generally believe that maybe the stocks have run up too high, too steep. But just to put a example in terms of the context of what we flagged off a couple of weeks back in terms of data points, Kalyan Jewellers, when the stock had moved up significantly high, 20% plus in a matter of 2-3 days, there was a huge spike and jump in the delivery volumes. So if you see delivery volumes data improving and increasing for names like Landmark Cars, etc., then you generally attribute that these are not short-term oriented buying which is happening. These are structural changes which happens into stock prices, which have a very positive effect into stock price for the next week, month, or maybe quarters.
Okay. And Mrs. Bectors, could you throw some light on your view there as well, Kunal?
So it's a very interesting chart. I think for the last 5 or 6 quarters on a trot, the stock has shown negative price performance. We've seen the stock falling from 425 in 2024 to almost 170, 160, which is the recent low for Bector Foods. So it's almost like a 60% plus correction for the stock price. And we've seen historically that when stocks fall for 4-5 quarters on a trot on a consecutive basis, there is a resurrective move which happens for 2-3 quarters. In the process of doing the rally or a counter balance in terms of the price trends, you see the stocks come back to at least a 2 or 3 quarter high, which apparently for Bector Foods is at 250 plus level. So my sense is that at 185.88 with the stock closed on Friday, I think on the quarterly basis for the next two quarters or so, I would look at 250 as a potential target, which is a decent 30% to 35% for the stock price from current level.
Let me go across to Rahul. Rahul, Tata Technologies came out with numbers as well. It looked like a decently strong set, right? How should one look at the numbers and how do you look at the stock?
So I think the numbers were pretty in line with the street estimates, and if you look at in terms of valuations vis-a-vis the other IT names, so I think reasonable. So it's in terms of valuation, it's still expensive, and we still believe there's a better names in large caps and mid cap space in IT names, and so we would avoid, and in fact we would give it a sell rating on Tata Technologies. That could be some more downside where the valuations just could be justified at this levels.
Rahul, what about other companies, the textile sector and others? We're seeing a lot of, tailwind coming in for many of those textile companies because of the FTAs which are coming into effect now.
So I think obviously we've seen some kind of momentum in getting into the textile companies. So I think I would what we've been liking is obviously one is Arvind at the current levels, Arvind Retail as well at the current levels, and what we believe, I think there could be the mixed stories and the others like Gokuldas and all the valuations have been a little bit expensive vis-a-vis this. So I think we remain bullish on Arvind at current price. There could be around 20% upside from here.
I want to check in on what realty as well is going to be up to, and I think realty as a sector was one of the rank underperformers all through last week. Having said that, Kolte Patil developers, they've come out with very strong Q1 sales. The collections and realizations have managed to boost the operational performance for them. But on the charts, Kunal, how do you see realty as a sector pan out now?
See, I strongly sense that I think there are many of the stocks which are still looking very strong at the current juncture for the real estate basket. You look at DLF, that stock has just started to come back into a resurrective phase. It's still yet to confirm a strong breakout above the long-term moving averages. But then when I try and compare this with the likes of Prestige, Godrej Properties, Phoenix Limited, etc., these stocks have done exceptionally well for themselves. So there's one end of the real estate stocks which have moved up 40%, 45% from their recent swing lows. And then there is the other end, the larger cap names, which are still up by 20-25%. So there's this gap of 15-20%, which is there for many of the stocks. And when sectors go into a strong revival rally, we generally expect that the revival trickles to majority of the stocks, including mid caps and large caps. So in that sense, I would sense that the real estate sector still has more room to go on the upside. But with the pace of rally which has happened in the last 2-3 months for the real estate stocks, we were almost at 650 or 660 on the Nifty Realty Index end of March. and we've crossed substantially above 900, 920 plus mark on the Nifty Realty Index. So it's almost like a 50% plus kind of a jump which has happened for the Nifty Realty Index in that sense. So maybe there could be a point where over the next 2-3 weeks, you might see some sort of a saturation happening in terms of the rally, but so far it looks very positive.
Out of the private sector banks, Kunal, which ones would really be a good trade for maybe the next couple of weeks? Because what's playing out this morning, at least very, very initial minutes, there seems to be a bit of profit booking outside of ICICI, where the stock seems to be, doing well. So ICICI Reliance seem to be doing okay. Will the trade shift towards ICICI, just sentiment-wise, just given the numbers? And are you seeing that on charts?
Yeah, apparently ICICI is the only one which is the strongest out of the large cap lot on the private sector banking names. That stock is above long-term average. It's above the 1400 plus mark. It's also crossed above the previous major swing highs. Compare this to, say, the most immediate peer in terms of price performance, which is Axis Bank. That stock made a recent high of 1400, and Axis Bank is down by 60-70 points, I think, until Friday from that swing high. So Kotak Bank, we all know, I think from 410 levels, the stock has corrected by 5-7%. That stock is sub the 400 levels. HDFC Bank is also below the 200 moving average. So when you do a price-wise comparison on a relative strength basis, ICICI Bank stands out to be the stronger ones. That's why I would not be surprised that the stock would continue to be the stronger ones from the larger cap private sector banking names even now.
Well, the strongest of the lot has got to be Kalyan Jewellers. And Kunal, you were the first one to really identify the move on Kalyan Jewellers. Even on Friday, it moved up a good 5%. Where from here now?
Yeah, there's a substantial change in delivery data. Aisha, we were flagging off that the stock saw an initial data point of 10 lakh and 15 lakhs in terms of delivery volumes. But that jumped up, when the stock saw a 20% move from 370 levels to first 420, 440, 450 mark. You saw a jump of almost 10x or 20x in terms of the delivery data for Kalyan Jewellers, and with no change literally on the F&O side. So that tells you that there's been a substantial institutional-based price action which has happened for Kalyan Jewellers. And from those 450 levels, the stock has moved to 570, 575 on Friday. So that's a substantial 30% up move. Historically, we've seen that when such kind of stocks happen for the stock prices, when they rally up 30-40% in a short span of time, they go into a pause for a week, maybe 2-3 weeks or so. But then when you see this over the next 6 months to 9 months, these stocks, they generally gain up another 30-40%, or the similar price gain in terms of percentage points from that period. So now I think for someone who's looking to buy Kalyan Jewellers, you'll have to have a two-pronged strategy. Try and buy the stock on marginal kind of corrections where the stock may probably exhibit, and then have a slightly medium-term time frame. Don't restrict your time frame to another 3 weeks, 4 weeks. You'll have to keep it at least 3-4 months minimum for the stock price to perform substantially.
Okay, that's the take coming in on Kalyan Jewellers. In the meantime, let's welcome on board Saumil Mehta as well, and let's see where the Nifty pre-open rates have stabilized. What's happening on Reliance? What's happening on ICICI Bank? Where is it that you're seeing Kotak right now? Nifty lower by about almost 0.5%. Reliance absolutely flat. ICICI Bank higher by 0.5%. What about Kotak? It's down 4%, even though the profits saw an uptick of 26%. Provisioning credit cost almost halved to about almost 0.5% or so, but not seeing excitement. It turned out to be more sell on, or rather buy on rumor, sell on news kind of story. Kotak already had a move up in Friday's session. PNB, the NII saw an uptick of 2%. Slippages were lower, 25% on a sequential basis. PNB definitely has gapped up. But if you can just bring up HDFC Bank again, because you're seeing quite a bit of harsh reaction come in on HDFC Bank. And again, mind you, these are just the pre-open rates. But directionally, it seems like HDFC Bank is going to be headed much lower today. 29 points lower, 790 is where that stock is. Yes Bank, the retail slippage has come in at a 10-quarter low, so look out for what that stock as well does. And then, of course, you also have the likes of Tata Technologies. There's Axis Bank, wherein the NII has missed the estimates. Look out for what that stock as well does. IDBI Bank, RBL Bank, both of those stocks have been a miss. Axis lower by a sharp 4%. IDBI Bank, the first rates haven't trickled in. RBL down 2%. So Other than ICICI Bank, which also is a very muted move, most of these stocks are seeing very sharp negative reactions. Also, Brent has jumped a good 3%. So let's check in on what OMCs, paints, aviation companies, etc. are up to. And maybe you will see a knee-jerk reaction come by. But Somil, hi, morning. Firstly, let's get a trade in on the Nifty Bank, given how some of these banking counters are poised to open, looking at pre-open.
Good morning to everyone. See, overall, if we say the markets are still in a range, and that range, I'm expecting that range to break on the upside. So now, Bank Nifty is already looking a little positive. Um, since the last trading session on Friday. It has broken a small range on the upside. Today, probably we'll see a small a correction again back into the range. The higher end, the resistance would be around 58,700, which is a very crucial resistance, and the support is around 20 daily exponential moving average, which is very close to around 57,500, 57,600 levels. So now I'll be expecting more range bound. However, the overall trend still remains positive, and I'll be expecting much higher targets on the upside, probably above 59,600 was my short-term target. However, I'll be expecting much more higher targets on the upside. So I'll be positive. Buy on decline should be the strategy, and I'm not expecting Bank Nifty to go below 57,500, which is the 20 daily exponential moving average. Same with Nifty as well. I'll be expecting much higher targets. However, at this point of time, my targets would be around 24,400, 24,500, which is very close to 200 daily exponential moving average.
Okay.
Because of what's happening to the private sector banking names, I was just looking at the very initial contribution plate. The Nifty is down 120 points, and 170 points is between the three banking names, HDFC Bank, Axis, as well as Kotak Bank. So that's one of the reasons why you see the index being negative. But we'll see how the markets balance it out, which are the sectors which try to offset. I would sense that the IT stocks should perform very well in such kind of a scenario. So hopefully, I think that could be a sector which one could watch out for. Tech Mahindra is something which I would suggest at the as the opening trade. The stocks looks fairly attractive, and especially with the move which happened for the stock in the last week, the near-term charts look a lot more better.
Slightly volatile on IT. Somil, your take, initial thoughts on the open this week?
See, as I said, that I'm expecting Bank Nifty to take support around 20 daily moving average, which was around 55,500, 57,500, 57,600 exactly. That's where we opened, and it has given us a little bit of pullback from those levels. I'm still expecting markets to be a little range bound and be a little positive. PSU banks have already started taking support around very crucial levels, and a few banks like Canara Bank and PNB are looking good. So I'll be expecting a good moves from here in the overall markets. Nifty, again, in the same range. We've seen a very good move on Friday. However, we've given up a few gains. Now 20 daily moving average, which is 24,100, will be a very crucial level to watch out for, and I'm still expecting markets to take support around those levels and keep moving on the upside. Range would be there. However, there are a few hurdles around 200 daily exponential moving average, which is 24,400, and the previous swing high, that is 24,600. So there are a few hurdles, but as soon as we move above these levels, I think we'll be having a confirmation in the medium term as well. However, at this point of time, the strategy should be to buy on declines.
Okay. Thank you so much, Somil, Kunal. We'll let both of you go on that note. Thanks for coming in, giving us your views.